Most investors think silver is simply another commodity, a metal used in jewelry, coins, and perhaps a few industrial products. But what if silver is something much bigger than that? What if one of the most misunderstood assets in the world is quietly sitting at the center of a historic collision between monetary instability, industrial demand, energy transition policies, and geopolitical competition? And what if the market is dramatically underestimating what silver could be worth in a world undergoing a major monetary reset? Some analysts have begun discussing scenarios that would have sounded impossible just a few years ago. Scenarios where silver is not merely revalued by 20% or 50%, but by multiples that reflect decades of currency expansion, growing industrial scarcity, and changing perceptions of money itself. The number that occasionally appears in these discussions is staggering: 7,000%. Now, before dismissing that figure as unrealistic, it's important to understand what proponents of this argument are actually saying. They are not predicting tomorrow's price. They are pointing to a much larger question. Has silver become one of the most undervalued strategic assets in the modern global economy? Because behind the headlines, something extraordinary may already be underway. Governments are carrying record debt burdens. Central banks continue navigating inflationary pressures. Industrial demand for silver is reaching levels few predicted a decade ago. Meanwhile, new silver discoveries remain limited, mining costs continue rising, and inventories are increasingly being scrutinized by market participants around the world. Here's what's really happening behind the headlines. Most investors are looking in the wrong place. And few people understand the chain reaction that could unfold if monetary confidence, industrial demand, and physical supply constraints begin converging at the same time. In this video, we'll examine 6 critical developments: why the idea of a major silver revaluation is being discussed at all, the hidden challenges facing global silver supply, the explosion of industrial demand, what history teaches us about monetary transitions, why sophisticated investors are paying attention, and what ordinary people should understand as the world enters a period of increasing uncertainty. Let's begin. The first thing to understand is that the discussion surrounding silver isn't really about silver alone. It's about the financial system itself. Here's what most people don't realize. Throughout history, monetary systems periodically reach points where debt levels become difficult to sustain. Governments respond through various mechanisms: economic growth, taxation, inflation, restructuring, or some combination of all four. Think of the global economy like a machine. For decades, the machine has been powered by expanding debt. Governments borrow, consumers borrow, corporations borrow. Financial markets become increasingly dependent on credit expansion. As long as confidence remains intact, the machine continues operating. But when debt grows faster than productive economic output for extended periods, questions eventually emerge about currency purchasing power. This is where precious metals enter the conversation. Silver has served as money for thousands of years. Long before modern central banking existed, silver facilitated trade across empires and continents. Today, however, silver occupies a unique position because it functions simultaneously as a monetary metal and an industrial metal. That dual role makes it extraordinarily sensitive to major economic transitions. Many mainstream discussions focus exclusively on silver's daily price movements. Yet, the bigger story may involve long-term structural changes unfolding beneath the surface. If you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly, because what comes next may be even more important. The supply side of the silver market presents challenges that are rarely discussed outside mining circles. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's increasingly what global silver production looks like. Unlike gold, much of the world's silver production comes as a byproduct of mining other metals such as copper, lead, and zinc. That means silver supply cannot simply be increased because prices rise. New mines take years, sometimes decades, to develop. Environmental permitting has become more complex. Energy costs remain elevated. Labor shortages affect numerous mining regions. And ore grades have generally declined compared to previous generations. Countries like Mexico and Peru remain critical suppliers to global markets. Together, they represent a significant share of worldwide production, yet these regions continue facing political uncertainty, regulatory shifts, and infrastructure challenges. China remains a major force across global mining and refining supply chains. Russia continues influencing commodity markets through broader geopolitical developments. Chile and Australia also play important roles across interconnected metals production systems. The challenge is not that silver is disappearing. The challenge is that bringing new supply online is becoming increasingly expensive and time-consuming. Mining executives have repeatedly warned that future production growth may struggle to keep pace with emerging demand trends. And that brings us directly to the next part of the story. Because demand is evolving in ways few investors fully appreciate. For centuries, silver was valued primarily for monetary and decorative purposes. Today, it has become one of the most strategically important industrial materials on Earth. Silver possesses unique electrical conductivity, thermal conductivity, and reflective properties. Modern civilization depends on those characteristics. Every solar panel requires silver. Electric vehicles use silver. Advanced electronics use silver. Medical technologies use silver. Telecommunications infrastructure uses silver. And increasingly, artificial intelligence infrastructure relies upon technologies that consume silver throughout supply chains. Think about the scale involved. Governments worldwide are investing hundreds of billions of dollars into electrification, renewable energy systems, semiconductor manufacturing, and digital infrastructure. Each of those trends increases demand for highly conductive materials. The defense sector adds another layer. Modern military technologies depend upon sophisticated electronics, communication systems, sensors, and precision equipment that frequently utilize silver. This means silver demand is no longer tied exclusively to investment sentiment. It is increasingly tied to industrial necessity. And unlike many materials, silver is often used in tiny amounts within products. That makes substitution difficult when performance matters. In other words, manufacturers may complain about higher silver prices, but many cannot simply eliminate silver from critical applications. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert, because history provides an important perspective on what happens when supply constraints meet monetary uncertainty. History rarely repeats perfectly, but it often rhymes. Consider the inflationary environment of the 1970s. Investors watched purchasing power decline while precious metals experienced extraordinary revaluations. Consider the financial crisis of 2008. Confidence in major financial institutions suddenly became a central concern. Precious metals attracted renewed attention as alternative stores of value. Then came the COVID-era disruptions. Global supply chains that many assumed were permanent and reliable suddenly fractured. Shipping bottlenecks emerged, manufacturing slowed, commodity shortages appeared across multiple sectors. The lesson is not that every crisis produces identical outcomes. The lesson is that markets frequently reprice assets when assumptions change, and assumptions can change rapidly. When investors believe inflation is temporary, they behave one way. When they begin viewing inflation as structural, they behave differently. When supply chains appear secure, strategic inventories seem unnecessary. When shortages emerge, priorities shift. The silver market has experienced periods of explosive repricing before, not because silver itself changed, but because perceptions changed. The market suddenly recognized conditions that had been developing quietly for years. Today, many analysts see similarities in the build-up process, even if the exact outcome remains impossible to predict, which helps explain why sophisticated capital is paying closer attention. One of the most interesting developments in recent years has been the growing focus on monetary resilience. Central banks around the world have accumulated significant quantities of gold. Many nations are exploring ways to reduce vulnerabilities within international payment systems. BRICS countries continue discussing alternatives that could increase financial flexibility. At the same time, government debt levels across major economies remain historically elevated. Deficit spending continues expanding. Interest expenses consume growing portions of public budgets, and questions surrounding long-term currency purchasing power have become increasingly common. Institutional investors, family offices, and wealth managers are not necessarily preparing for catastrophe. They are preparing for uncertainty. That's an important distinction. Sophisticated investors often focus less on predicting specific outcomes and more on managing risk across multiple scenarios. Silver attracts attention because it sits at the intersection of several major themes simultaneously: monetary uncertainty, industrial demand growth, supply constraints, geopolitical competition, infrastructure expansion, energy transition. Very few assets have exposure to all those trends at once. If you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. Now let's discuss what all of this could mean for ordinary people. The most important point is not whether silver rises 50%, 500%, or 7,000%. No one can predict the future with certainty. The real lesson involves understanding the forces at work. Inflation affects purchasing power. Debt influences policy decisions. Supply shortages impact prices. Technological transitions create winners and losers. These dynamics affect everyone, whether they own precious metals or not. Retirees feel it through rising living costs. Workers feel it through declining purchasing power. Families feel it through housing, energy, food, and transportation expenses. The objective is not speculation. The objective is preparation. Historically, individuals who understand long-term trends often make better decisions than those reacting to headlines. That doesn't require extreme forecasts. It requires education. Diversification remains important. Long-term thinking remains important. Risk management remains important. Patience remains important. Markets can remain irrational longer than expected. Cycles often take years to unfold, but understanding structural trends provides an advantage regardless of short-term volatility, and perhaps that's the most important takeaway from today's discussion. The idea of a 7,000% silver revaluation is ultimately not about predicting a specific number. It's about recognizing how dramatically assets can be repriced when monetary systems evolve, supply constraints intensify, and demand expands simultaneously. As we've explored today, silver sits at the center of several powerful global trends: rising debt burdens, monetary uncertainty, industrial transformation, energy transition, geopolitical competition, supply chain vulnerability. Each trend alone would be significant. Together, they create a landscape unlike anything many investors have experienced during their lifetimes. That does not guarantee a specific outcome. It does not guarantee extraordinary returns, but it does suggest that silver deserves far more attention than it currently receives from mainstream discussions. Markets move in cycles, headlines come and go, but the laws of supply and demand never disappear. And when those laws collide with shifts in monetary confidence, the results can surprise even seasoned observers. Pay attention to the trends most people ignore. Study the fundamentals. Follow the incentives, understand the bigger picture, because sometimes the biggest opportunities emerge long before the crowd notices. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.